Hi, this is Rony Mullick, and you are watching the pre-market show. And let us see how the markets are opening today. Yesterday was a holiday, and today market is opening with a huge gap down. And this was evident because Tuesday's market was purely because of short covering, and the markets shot up so much without any underlying news. And so today is we're going to pay the price, and especially because the global markets are significantly down, and since the last 2 days there was no recovery whatsoever in the US markets or any other market around the world. And today we are opening close to 300 points gap down as indicated by SGX Nifty. So it is going to be interesting because SGX Nifty for the last 2 days it has been very volatile, and since the market was closed yesterday there was a big red candle, and today the market's opening from almost where it started on Tuesday. So very interesting to see. SGX Nifty is indicating 17,480 as an opening for markets, and we closed around 17,759 on the day before yesterday on Tuesday. Day before yesterday was a Ganesh Chaturthi, so markets were closed. Today is going to be a significant gap down as the markets are slightly lower, and the reason for this is definitely global markets. Like I told you, let us quickly go and check the US markets and see the level of fall over here. Nasdaq, S&P 500, Dow Jones, all of the three indices are down, and you can see it has been falling continuously for the last 3 days. So no signs of recovery whatsoever. Actually, from Friday, the market started falling, and after that there's no recovery whatsoever. And if this continues, the markets can easily go and touch the June low. So let us see how the S&P 500 when it reverses, or if anything of that sort happens. Nasdaq also weak. You can see it has been continuously falling for the last 2 days, down by 0.57% yesterday, and Dow Jones is the most negative, down by 0.88%. So things are looking particularly bearish in the US market. And coming to US futures, the futures are still down today, and right now they are open, but all of them are close to 5.6% down. Coming to Asian markets are also not looking particularly good. Hong Kong market is down significantly. Let us open up the intraday chart. It looks opened with a gap down because of US markets were negative. Now it is still trading in a lower range as well, 0.83% down. German markets and Korean markets are the weakest. German markets down by 1.5%. You can see huge gap down, and then the markets are closing lower. Korean markets are 1.68% down, but only the Chinese market is trading flat as of now. So things are looking particularly bearish in case of the Asian markets is what we are seeing. And that is also a reason why SGX Nifty is indicating such a huge gap down. And let us quickly see an overview of the oil prices and the dollar index. Oil prices is good. It came below $90 per barrel, so that is some good sign. But let's see, because sometimes what happens in a uptrend, you you touch this trend line and then go up. So you have to see that if the market breaks this trend line and goes downward, then it is again a good thing for the markets. So we have to wait and watch and see how things happen. Dollar index is at 109.09. Again, danger bells are ringing in dollar index. It has touched 109 all-time high levels. Definitely it is trading in dangerous waters, and this can be bad for the equity markets. And so 109.007 is dollar index. So obviously markets are has to be bearish, and that is exactly what we are seeing in the global markets. Indian markets are not following that in the short term, but in the long term everything is attached. So Nifty is so let us open up Nifty and see how the things we can expect today. So a huge green candle forming yesterday, Nifty up by 446 points, significantly higher is what we are seeing. And today what we can expect is the markets can open around 17,500 levels, and if that happens, we are looking at first support of around 17,450. This should hold as a very important support. If this is broken, 17,370 is the level of support I'll be watching out for. And on the upside, you can expect 70,630 to hold as an important level of resistance, and up above definitely yesterday's high is there. If that is broken, further bullishness can be expected. Today is an expiry day, so keep that in mind. So expiry days are likely to be volatile, and especially when a gap down of 300 points is on the table, and markets can be quite volatile is what we can expect. So a broader range, a range today we can expect 70,635 on the upside and 17,300 to 370 on the downside. 17,450 in the middle should act as a very important resistance or support wherever the market is opening. And one key thing we have to watch out today is if this trend behavior continues in the market or not. So what is happening for the last 2 days, I mean on Monday and Tuesday, markets are opening with a significant gap down, then it is shooting up like anything. And also on Tuesday, markets opened, although opened with a gap up, but from there the trend continued and it moved at the ended at the highest point of the day. So if that happens today as well, open with a gap down and it is moving up, then we can expect market is still strong. Otherwise, if that is not happening, then we can have to get a bit worried. Apart from that, Bank Nifty is same thing. Bank Nifty is also if Nifty opens 300 points down, Bank Nifty can open 600 points down. That brings us to 39,000. It's a psychological level, and markets can hover around that. So on the downside, I'm expecting 38,750 to hold as a support, and upside 39,400 to act as an important level of resistance. So this is what we can expect in Bank Nifty for today's expiry, and first expiry of the month. It's a 5-week series, so 5 more expiries to go. And obviously, the first week has been quite treacherous. Markets have been making huge moves without taking any trend. One day it is up significantly, the next day it is down significantly, and things have been quite volatile as of this first week. And in terms of the economic data, we have seen the Indian GDP rate coming out, and it came out 13.5%, but it is lower than expectation. Expectation was at 15.2%, so slightly lower than expectation. And let us see how the markets react to this news as well. So overall, expecting a slight consolidating day with good volatility is what we can expect because of the expiry day at the end of the day. So let us expect the first expiry of the series goes well and goes in our favor. We have to if you are trading today, intraday especially, it is best to wait for the first 15 minutes and see if that thing we talked about, that markets opening with a gap down and then it is shooting up from the very first candle. If that kind of behavior is shown today, then you can go long after first 15 minutes. And if that is not the case, if the markets are breaking the first 15-minute low, then it is time to go short on the market. So you can do these analysis yourself, and I've also told you the levels you can watch out for. So hope you have good expiry, that is the first expiry of September. And this is all from my side. Thank you for watching and have a great day.